Good afternoon, and welcome to everyone joining us today. Today's meeting will include several reports, including from our FASB Chair, our GASB Chair, the FAF Executive Director, and the FAF Treasurer. We're also going to hear from the chairs of the Financial Accounting Standards Advisory Council and the Governmental Accounting Standards Advisory Council about their latest activities. Finally, we'll also get a report from the co-chairs of the Trustees Standard Setting Process Oversight Committee about their recent meetings. Before we get to those reports, however, I'd like to recognize 4 new members of the FAF Board of Trustees and welcome them to their first official meeting. Our new trustees are Manju Ganeriwala, Treasurer of the Commonwealth of Virginia, Ted Goldthorpe, a partner and head of credit for BC Partners, Brian Lewis, Vice President and Chief Investment Officer for United States Steel Corporation, and Diane Norden, the former partner and director, fixed income for Wellington Management Company. Again, I want to welcome all of you to the board and just note that we all look very much forward to working with you in the years ahead. So now moving forward into our regular agenda, the first item of business we have are the minutes from our November 16th meeting. And I'd like to ask for a motion to approve those minutes. May I have a motion? Second?
Second.
Any objections? If not, we'll accept the minutes. Thank you very much. Now I'd like to ask the chairs of our FASB, FASAC, GASB, and GASAC for their reports. And we're going to go ahead and start with Rich. Rich?
Great. Thank you, Kathy, and welcome to our new trustees. You have a copy of our report in your materials today, a copy of the FASB Chair report. I'd briefly like to summarize a few highlights, though. So we ended 2021 by laying the groundwork for what has been a productive and busy start to 2022. Our focus continues to be in 3 areas: our agenda outreach initiative, the post-implementation review, and continuing progress on our existing agenda, all of which are focused on improving financial accounting and reporting. I'd like to spend a few minutes to update the trustees on our progress in these 3 areas. Regarding agenda outreach, our staff continues to focus on in-depth analysis and additional stakeholder outreach on what we learned from the more than 500 responses to our agenda consultation invitation to comment. But that feedback is already influencing our current agenda. For example, investor feedback on disaggregation of financial information in the income statement will be discussed tomorrow as we shape the future direction of our current project on financial performance reporting. In addition, on December 15th, I announced a comprehensive update to our research agenda to focus specifically on the input we received as part of our agenda outreach. That included adding research projects on accounting for exchange-traded digital assets and commodities, accounting for financial instruments with ESG-linked features and regulatory credits, and accounting for government grants, including an invitation to comment related to the ISB's existing standard on accounting for government grants. We also expanded existing research projects to address the accounting for internally developed software and the definition of a derivative. And I would emphasize that we aren't done. Over the next several months, our staff will be bringing back additional feedback we received as part of this process, so it may all be discussed in public meetings as we explore paths to achievable standard setting. That collective feedback will continue to influence the direction of our existing projects, be further explored as part of our research projects, and otherwise discussed by our board. Turning now to the post-implementation review, we continue to make progress on the post-implementation review of our revenue recognition, leasing, and CECL standards, all under the supervision of you, our Board of Trustees. As a result of this continuing review, we recently issued final standards to improve lessee discount rate guidance and to provide investors with better information and accounting related to revenue contracts with customers acquired in a business combination. We also just recently completed deliberations and directed our staff to proceed to a final standard that, in response to significant investor input, would eliminate the accounting guidance for troubled debt restructurings by creditors while enhancing disclosure requirements for loan refinancings and restructurings by creditors made to borrowers experiencing financial difficulty, and to also require disclosure of current period gross write-offs by year of origination. We have also made progress on our acquired loans project, which was added based on significant investor feedback as part of the post-implementation review. While our post-implementation work continues, I would like to thank all of our stakeholders who took the time to share their feedback as part of this process and to help us continuously improve these standards. Regarding our existing agenda, we continue to make good progress on our existing agenda projects and are focused on completing our projects and creating capacity for new projects that will be added as part of the agenda outreach process. We recently issued final standards to require disclosure of information about certain types of government assistance, such as cash grants and grants of other assets. And we completed a PCC initiative, a private company council initiative, to improve an area of financial reporting for non-public business entities that issue equity classified share-based awards. We also completed deliberations on our portfolio layer hedging project and expect to issue a final standard shortly. We issued numerous exposure drafts, including exposure drafts related to interim financial reporting, disclosure of supplier financing, and the effects of contractual sale restrictions on fair value. And last, but certainly not least, we issued 2 concept statements addressing financial statement elements and presentations. Concept statements provide a useful resource for our boards to consider as they set future standards. In closing, I would just like to thank all of our staff for the efforts they put forth in helping us to move forward with these initiatives, our board for their continued focus on our mission, and finally, our stakeholders, without whom the improvement to financial accounting and reporting could not be achieved. With that, Kathy, I'm happy to answer any questions.
Yeah, thanks very much for your report, Rich. Obviously, a lot going on. Do we have questions for Rich on his report? Mary.
Rich, thanks for that report. Very complete and interesting. One question I had with respect to the agenda outreach that you talked about and putting items on your research agenda. Can you tell us a little bit about the difference between, from your perspective, about putting something on the research agenda versus a technical agenda? And does putting on one agenda versus the other speed up or slow down the timetable at which the board will look at this issue?
Sure, Mary. That's a great question. So the technical agenda items are only added to the technical agenda upon the vote of a majority of our board. So that's a majority of our board deciding to add a project to the agenda. But very often when it comes to projects like some of those that I listed that are on our research agenda, it's very helpful for our board to have additional information before making a decision on, is that a project that they're interested in pursuing? Effectively, getting that information and seeing, is there a recommended path to achievable standard setting? And that's where the research agenda comes into play. That's something that I can add items to the agenda, the research agenda on my own versus the technical agenda, which is the majority of the board. I laughed when you said, is that meant to speed up or slow down? I will tell you, it's absolutely meant to speed it up. The idea is the better information we can provide to our board members, the more quickly we can move in a direction and achieve that, what I call the achievable standard setting.
Other questions for Rich? Rick.
Thanks, Kathy, and thanks, Rich, and thanks for the conciseness in the report that you provided. I know you and the board routinely have discussions with other international standard setters, and I know you've done that. You've commented on that in the past. How significant are those discussions, or how does those discussions then lead into what might show up on our agenda here?
Sure, Rick. No, that's a great question. And while I recognize a lot of this goes on behind the scenes, I will tell you that our staff and the International Accounting Standards Board staff meet on a regular basis, that I and some of my fellow board members, we meet regularly with the ISB board members, including their chair, as well as other standard setters around the world. And that's all part of a sharing of information. We can get great ideas from projects that they're looking at or different experiences they've had. By the same instance, we can share some of the information that we have to help them with their projects. Obviously, to the extent that we're dealing with a similar project or a similar standard, it's certainly helpful for us to understand any direction that they're going or we're going. A good example of that might be our current project on, as we explore adding amortization to the current goodwill model. The ISB also has a project on their agenda related to business combinations and goodwill accounting. So we're sharing information there. And in fact, we've actually altered our time frame so that we can share information and progress as we move along with the ISB, recognizing converging or diverging in any answer is an important part of a cost benefit analysis for both of our boards. And that's something that we consider. I'd also mentioned on the research agenda, I talked about outreach on government grant accounting. Interestingly enough, the way we're doing that is we're actually taking an existing international standard and exposing that via our invitation to comment to get input on, would that be an appropriate solution for us to explore here in the US? So I would say regular conversations and regular sharing of information, right?
Other questions for Rich? Tim.
Hey, Rich, thanks for the update. And it was especially nice to hear your, I would call upbeat comments on the post-implementation review. And we're definitely learning something from that and the sort of course corrections, if you want to call them that, that occur at the end. And I'm just curious if you could expand it all, how I'm assuming we're taking that, what we learn at PIR, along with the agenda consultation process. And between the two, it becomes pretty powerful feedback for you as you try to, continue to improve the process of standard setting and implementation. So anything you can add on that front?
Sure, Tim, that's a great point, because the post-implementation review really serves two purposes. The first is we're actually seeing how those specific standards are working and is there improvements that we can make. And as I think all of you know, large standards like that, like our revenue recognition, leasing, and our current expected credit loss model, they're rarely one and done, meaning there's an opportunity to improve them. The key is that we're out there, we're understanding them, and we're trying to identify them as quickly as possible and make those needed changes. The other part of the post-implementation review process, though, is lessons learned from us for the next standard that we set. In other words, are there any common areas where we're more apt to run into challenges? And is there something about our process or the feedback we get through that future standard setting that we could improve on? I think it's fair to say that in those three standards, we certainly got feedback on the interaction with business combination accounting. So that I think that's an area that probably takes special emphasis for us as we go forward and set new standards and making sure we understand the interactions with business combination accounting. I think transition's another. And as you also note, is part of our agenda outreach, we also got some feedback on some of our processes to see if there were ways to improve, for example, what the EITF looks at and the way they do it, and to make them as they help us with standard setting. So lots to learn from both aspects.
Thanks, Rich.
Thanks very much, Rich. Are there other questions for Rich before we move on? No? Thanks again, Rich. So Mike, you want to talk about the activities of the FASAC?
Yes, thanks, Kathleen, and hello, everyone. My report can be found on master page 66 in your materials. That report includes activities through the end of December, and I'll highlight today some recent and upcoming activities, starting with the December FASAC meeting, which included discussion on two topics. First topic was on financial performance reporting, disaggregation of performance information. It's the second time we addressed this topic. We had an educational session earlier in the year. During this session, FASAC members discussed the feedback on disaggregation received from the FASB's 2021 agenda consultation and provided input about expense captions for which there is the greatest need for disaggregation, as well as disaggregation approaches for those expense captions. Investors and other financial statement users stressed that cost of goods sold and selling general and administrative expenses would be the best expense caption candidates for further disaggregation. They explained that greater disaggregation would assist them in analyzing the company's margins, forecasting future results, and understanding the extent to which costs are fixed or variable. They also indicated that comparable and consistent information among companies is important, and additional disclosure about disaggregation could be helpful. Most council members supported the FASB pursuing greater disaggregation of the income statement through a principles-based approach when compared to a more prescriptive approach. Other disaggregation approaches that some council members suggested include a phased approach, focusing on one aspect of disaggregation at a time, for example, selling general administrative expenses or cost of goods sold. and or developing some standard definitions around expense captions, as well as disaggregation of existing line items through additional disclosure. The second topic we discussed was the 2021 agenda consultation. During that session, the FASB staff summarized the feedback received in response to the agenda consultation process. Council members discussed general observations about the feedback and asked questions about various topics within the 2021 agenda consultation. On February 24th, we will have an orientation for our newly appointed FASAC members. On Monday, March 14th, we will have our annual administrative session for all members, which includes a self-review of our operations and effectiveness. At our upcoming FASAC meeting, which will be on Tuesday, March 15th, we anticipate the topics will include two of the projects that you heard are on the research agenda, accounting for disclosure of intangibles, and the second, accounting for government grants. In January 2022, I also met individually with each board member and the FASB technical director to discuss FASAC operations and potential meeting topics. An outlook for potential FASAC topics for 2022 is on master page 70. We would welcome your input on these and any other topics that you think FASAC should consider in the future, and I'd be happy to take any questions that you might have.
Thanks very much, Mike. Do you have questions for Mike from the trustees? Mike, thanks again for your report. Very fulsome, and I appreciate all of your hard work. So let's move on to Joel. Joel, do you want to give the report of the GASB?
Yeah, thanks, Kathy, and it's great to see everybody. Special welcome to our new trustees and to our a new face, another new face on this meeting that you'll hear from in a few minutes, but our new GASAC chair, Beth Pearce. So look forward to hearing from her. But thanks to all the trustees for your time and expertise and perspectives on our activities and for listening to me share a little bit about them. We did issue early in the fourth quarter GASB 98, which changed the name of the Comprehensive Annual Financial Report to the Annual Comprehensive Financial Report, which we've talked about before. Happy to say that that standard seems to be operating. It was effective pretty quickly, and you're hearing the term ACFR at conferences and in meetings, so people are getting used to the new terminology, and we're excited about that. A big three, we always talk about the big three. I would say on the two of those, the financial reporting model, and specifically the governmental funds accounting and the revenue and expense recognition project, a lot of the feedback we've heard so far has said, really look at these two projects together. A lot of it was about effective dates and how the standards might be implemented at the same time, but even some feedback on really making sure that we understood how these projects interact with each other, because they're both very comprehensive projects that deal with the accounting for many transactions for governments. And we are seeing that as the revenue and expense project progresses. The board is more and more piecing together kind of how those two standards operate. And you heard a lot of that throughout our meetings in the fourth quarter, and will continue to do so as the board really pushes to make sure that those two projects work together. And when then they come out, whenever they come out, that they will be operationalized in a way that preparers, auditors, and users can all kind of use that information, and it makes sense, whatever the new standards require the accounting to be. So you hear us talk about that a lot. The third of our big three, the disclosure framework, we just started actually this first quarter redeliberating a lot of feedback we heard from our re-exposure draft related to that. Some divergent views on primarily preparers and auditors thinking our description of essentiality made sense. A lot of users responded with maybe some suggestions for improvement of how we described essentiality. And we will actually have a big meeting tomorrow to begin debating that very topic as a board. In December, the board did approve the technical agenda for the first third of 2022, adding a major project on going concern and severe financial stress disclosures after 5 years of research on that topic to try to bring those concepts into the government environment better, describe them, and describe what disclosures should be required. We also added subsequent events to our pre-agenda research topics and added digital assets as a monitoring activity with an eye towards gathering more information and potentially in April, adding that to the pre-agenda research, seeing if the board has an appetite to do that. Finally, I'll say we continue to all of our projects, move them all forward and look forward to final standards coming in the second quarter on compensated absences, accounting changes, error corrections, and an omnibus statement. So that high level overview of where our activities for the fourth quarter, but happy to answer any questions.
Thanks very much, Joel. A question from Chandran.
So Joel, we're all
I think Chandran is frozen.
hearing a
Chandran, we're having trouble hearing you.
lot about the labor acute it's affecting the GASB.
I think I heard we're hearing a lot about labor shortages in the market, I think is what Chandran's asking.
Yeah, I'm sorry about my connection there. I was just trying to get some color on that.
Sure. We do hear that, Chandran, a lot at the conferences we go to from all of our stakeholders, in particular the payers and auditors, that they are, with the Great Resignation, it's affecting governments as a whole, in particular their finance departments. So it's something we're paying attention to. I don't think there's anything specific we need to do standard wise as much as, or maybe more just understanding that resources are stretched thin. As we take on topics, as we ask for feedback, be sure we're giving appropriate time, comment periods, help to the extent we can help. That's kind of how we've reacted to it so far, but it is something that we are hearing a lot about and trying to pay attention to.
Chandran, any follow up on that?
Thanks, Kathy.
Yep. Lynnette?
Great, thanks, Kathy. Joel, first I wanted to commend you and the GASB team on the stakeholder outreach and engagement that's been done in the past quarter. Really terrific and great to see that remains a strong priority for you. I'm interested in the Going Concern project and what your research showed, what made you add it to the agenda, how long you think it will take. Can you give us a little bit more color?
So sure, the Going Concern project, the research showed that going concern really doesn't mean the same thing in a government environment, or maybe shouldn't mean the same thing, in that governments typically don't dissolve. They don't go out of business. They don't cease to exist as an entity. When they experience financial stress, like a default or something like that, it doesn't mean they're going to go out of business. And so we saw some inconsistency in how going concern might be interpreted by different stakeholders. Some might take that literal interpretation that I only need disclosures if I think the government's going to go out of business, which again, the research showed that doesn't really happen, versus some viewed it more as something like severe financial stress. So the project is really aimed at defining maybe those two terms, going concern and severe financial stress, figuring out how to apply those in a government environment. Not necessarily with specific saying, you meet this indicator, that means you're in this bucket and you have these disclosures, but giving some color, some characteristics that might suggest that you would be in one of those two situations, and then suggest what the disclosures should be required if you do use your judgment and find yourself in one of those descriptions. So that's what we're trying to achieve. It's a major project, so the timeline right now is kind of 5 years. But we will see how we end up with that.
Other questions for Joel? Larry?
Yeah, Joel, you mentioned the Great Resignation impact on staffing, but you have the GASB has 3 open positions. So what kind of progress are you making in terms of finding candidates to fill those positions?
We seem to struggle a little bit more than the FASB. So if anybody's watching and wants to come work at the GASB, love to have you. We do have 3 open positions, although one of them is now filled. So we actually really only have 2. One starts actually next week. We have a new project manager starting. So we're very excited about that. So we continue to work and promote our open positions and people that would be interested. So we are getting some other interviews coming in. So we're hopeful to fill those soon, but Larry, but appreciate you asking. That's where we are.
Other questions for Joel? Mary?
Joel, you mentioned that you're going to be monitoring the digital asset space, and obviously the FASB has put this on their research agenda, so I presume part of your monitoring will involve what they're up to. But is digital assets a topic that you anticipate will be like going concern, in that it's different for government entities than it is for-profit entities or private entities? Or is it something you anticipate probably whatever effect there is for financial statements for on the FASB side will be similar on the GASB side? I just wonder how you're thinking about it.
Sure. We will see where it goes, Mary, but my, I guess, personal and initial thinking is, number one, I think adding it and trying to leverage the knowledge and research that the FASB might be doing is helpful, right? So this is a new topic, evolving topic. So we would like to leverage the information that they obtain and hopefully share what we obtain as well. But I do think that they're part of why we're undertaking it is for a different purpose, because where we see governments interacting with these digital assets isn't on the investment side, which maybe is I guess I shouldn't suggest where the FASB might be going, but we do see that, especially with pension plans on the investment side. But really, some of the questions we're getting are a state who might have unclaimed property and they have this digital asset. Well, what do they do with it? Or they have a confiscated asset that's being held by a court for some period of time. Well, what do they do with that? How do they value it? How do they account for it? So we do see it kind of crop up in unique government situations that we might need to address if they're prominent enough, that would be different than how the FASB, what the FASB might need to.
Other questions? Joel, thanks very much for your report. So introducing Beth for her first report as GASAC Chair. Beth, can we ask you to report?
Well, thank you very much. And thank you, Kathleen. And it is my first report. I'm delighted to be here with such a group of professionals, and looking forward to continuing in that role of how important government accounting is to the equation, and how we can assist in making that input to the GASB so much a part of the deliberations. And again, I'm excited about the role. Our last meeting of 2021 was held on December 12th and 13th. It was very well attended with 25 council members, as well as 7 GASB members and a number of GASB staff, as well as representatives from the Financial Accounting Foundation. So very well attended meeting. I think it was a good way to end the year, and looking forward to our March meeting as we begin the new year. We did look at a number of projects, including compensated balances, the recognition and the financial reporting model, the Omnibus project, as well as the prior period adjustments, accounting changes and error corrections, revenue and expense recognition, and risk and uncertainty disclosures. Going into that issue, by the way, as I listened to Joe Black's presentation, in terms of the going concern, that was a big issue that we have been talking about, as are you. And you're correct, it's very different than what we see in the private sector. Governments do not go away, but they do have financial distress. And how do you measure that? How do you identify it? How do you measure that? And what types of disclosures? I believe that's going to be a animated conversation as we go forward. And as well as obviously the changes in the conceptual framework. We did receive reports from the FAF, the Financial Accounting Foundation. We also received a report from the chair of GASB, as well as Alan Skelton and the new GASB Director of Research and Technical Activities. We did have a number of changes in our membership this year. We added 6 new members. And we saw 5 members retire. We thank them, the 5 members retiring, for their service to GASAC and to GASB and to the FAF. We appreciate the new members coming on board. I have had an opportunity to talk to all the new members, as well as the existing members, and we'll continue to do the same. Our goal will be to take a look at how we can improve our input to the FAF, to GASB and the FAF on the various issues, but also how do we get that information out to our membership? And the conversations that we've had thus far are, what are your current protocols? What are your current methods of delivering information and receiving information from your various constituents, and how can we enhance those? So we're going to continue to have that conversation with our members and see if we can come up with new ways to increase that. We've also implemented a mentoring project for our new members, and we also will have a new membership meeting on March 3rd, and an orientation. And I want to thank Dean Mead for leading that conversation, leading that effort. Our next meetings are, our last meeting was virtual. Our first meeting in March will also be virtual. We're hoping that down the road we can have in July and in October our meetings in person. The July meeting being in New York and the October meeting in Norwalk. And we hope to be able to do that. As I said, we've had a lot of turnover in the members of GASAC, and it would be great to be able to get those folks together. Again, I appreciate the assistance that I've received in my first year as the GASAC chair, and I want to thank all the members of the staff, as well as the members of GASB and the FAF for your support and your efforts to bring me up to speed on the issues. And with that, I'll finish my report and be happy to answer any questions.
Beth, that's fantastic. Thank you so much. Do we have questions for Beth? No? Well, Beth, again, great first meeting, and appreciate all of your good work.
Thank you.
So we will next turn to a report from the Oversight Committee, and I'm going to ask David and Tim to report on that meeting. David?
Great,
Or Tim?
Yeah, I'll go first, Kathy. Thank you. Good afternoon, everybody. It's good to see you all. Thank you for the time. On Friday, myself and David hosted a meeting of the Oversight Committee. We had a really robust agenda. I'll cover some of the FASB parts, and David will cover some of the GASB parts. As Rich just talked about in this session, he covered a number of topics. We first heard from Rich on agenda consultation, and in particular, how they're using the research agenda and the technical agenda, and particularly the research agenda, to be responsive to feedback from stakeholders for speed without sacrificing quality on some things that people are dealing with. So Rich mentioned topics like digital assets, ESG finance, and the like. And so it was good for the committee to see how both the technical agenda and the research agenda are being used. And we had a good discussion around that, all with the goal of being responsive to our stakeholders and the feedback they're giving us in their real-time needs. We then spent time on the PIR process, as Rich talked about, and we got an update on each of the areas of PIR. The committee felt very comfortable about the fact that the PIR process is in fact yielding adjustments based upon feedback from stakeholders and the work that the FASB team is doing. One of the things that's important to the FAF is that the PIR process is robust, that it's frankly doing more than going through the motions. And we saw that, and we continue to see that in the process Rich and team are running, gives us the confidence of that. And we continue to see changes, not only in the standards that they're analyzing, but then those lessons learned are put back into the existing standard making process. And we feel good about how that process is functioning. We do have a couple of new committee members, and we did take time at the meeting to go through the history of the PIR process, while we believe the current design is best suited for high quality standard making. We then went into the topic of this current standard setting agenda. Rich and Hillary Solo took us through several of the key projects on the agenda, including those that are on track and some of them behind track. We understood the reasons why they were behind track, and we also spent time understanding the process for rating a standard higher risk, medium risk, or lower risk as well, and had a good discussion on that topic. We went over current events that Rich and his team are dealing with to be responsive to the dynamic environment that we're all living in, and got an update of how the FASB team is being responsive to stakeholders and feedback they get on hot topic issues. And we had a good discussion around that. All in all, it was a very robust discussion with Rich and his team, and the candor with Rich and his team brought to the discussion was welcomed by the committee. Switching gears, we then heard from Sue Cosper on PCC matters. Sue took us through the agenda at her most recent meeting. And we also we had a good discussion around topics such as how do we learn from public accounting standard making, smaller public companies on topics like leasing intangibles and how that translates over into the private world. Rick Riesig observed the most recent meeting. And Rick, I might ask you just to give a comment or two because you observed Sue in the PCC's latest meeting, and I might turn it over to you just to give a little bit of input.
Thanks, Tim. I'll be real brief. The one thing that was so notable to me, it was a 2-day meeting that the PCC had. One of the sections being a joint session that they had with the Small Business Advisory Council. And it was a great dialogue. The FASB folks were involved in that, and there was a good sharing of thought. And I think the success of it, led by Candy Wright and Alicia Posta, who are the corresponding chairpersons of each of those groups, I think the success of it was the interaction between the groups and how they keyed off of each other in their dialogue. And I thought that said a lot about how they were listening to each other and sharing their thoughts and ideas. And I hope that the FASB members got a lot out of it, because I did, certainly as an observer. So success was had, I think, by the joint session.
Thank you, Rick, very much. And the last thing we talked about in the PCC meeting is we know Sue and team welcome 2 new members, say goodbye to 2 previous members, and thank them for the service. And again, transitioning was, we felt comfortable about the transition process as well. So David, I'm going to flip it over to you for an update on the GASB side, if that's okay.
Thank you, Tim. As always, during the process oversight committee meetings, we take up the GASB and its operations and provide oversight with respect to that. And during his quarterly report to the committee, GASB Chair Joel Black went through many of the same things that he went through earlier today in his report here to the board. So I won't belabor that for the purposes of time. I do want to note, though, in particular that that he reported on and the committee also discussed in depth, as Tim pointed out, with respect to the other side. We also did this on the GASB side for the PIRs, the post-implementation reviews that are underway. We have 6 of them that the GASB has undertaken here, including Statement 67 on pension plan reporting, Statement 68 on employer reporting for pensions, 2 of the more significant ones, but there are others as well. And as Tim indicated, we delved into the process very deeply to make sure that it is a robust process and one that's very meaningful in terms of the results that are yielded. I also want to note that Alan Skelton, the technical director, participated in the presentation to the Oversight Committee and did an excellent job, and also went through various items that are on the agenda of the GASB relative to its operations. So we appreciate that. Another thing that, of course, the committee does is look at trustee reports on observations of meetings and such. And our trustees observe the meetings for the purpose of reporting back to the committee and discussing what they find. And we always discuss the FASB and GASB board meetings at each of these meetings. At the meeting, I shared my thoughts on the GASAC meeting that Chairman Beth Pearce just reported on from December. And it was a robust meeting itself. The GASAC, for those of you who don't know, is made up of some 25 different stakeholders and interest groups that are represented there that have interest in the operations of GASB and its issues. And what was amazing was that all of the members participated in a very robust fashion under the leadership of Robert Scott, the outgoing chairman, and our incoming chair, Beth Pearce. And so I think it's a situation where it's well functioning, and that's a good commentary on the ability of those members to participate. I also wanted to call on Rick just to point out that he had pointed out that the PCC meeting, he went to that meeting as well and reported on it just now. And finally, I wanted to point out that Larry Salva observed the December 2 FASAC meeting. And Larry, did you have any comments on that FASAC meeting?
Yeah, thanks, David. Similar to your observations on the GASAC, I observed the December 2nd meeting, which, again, was also held virtually. And as Mike indicated, the council discussed those 2 topics, the financial performance reporting and the agenda consultation. The first topic, because the FASAC is such a large group, It was handled in breakout groups, and the group I observed showed that the council members were very well prepared for the discussion. They were very engaged and participating, and while they expressed very diverse views, it was very clear that they were respectful of the differing views of the various members of council. I also observed that Mike was extremely effective as the chair of FASAC, and that the meeting was very well run and Mike was well prepared. So a very impressive meeting. It was the first FASAC meeting that I've observed.
Okay, thank you, Larry. And let's see, I also want to note that Trustee Sarah Smith observed a GASB meeting in mid-December. Sarah, did you have any comment on that GASB meeting?
Sure. So I attended, observed, it was also virtual, the meeting on December 16th. It was a very interesting meeting to attend because there were two very distinct topics. The first was a technical issue that they were trying to resolve. And that in this case, I think it was under compensated absences. And what was interesting to me there was people put out their initial position and there was diverse views. There was a very vigorous discussion back and forth. Everybody listened, and ultimately there was consensus, which I thought was terrific. And I kind of wanted to put my own vote in. Actually, at one point, it was a very good discussion. And then the second half of the meeting was on the review of the forward technical plan. You know, what issues they're going to put on. And there, I thought the whole focus of the discussion was sort of balancing needs of the constituents with practicality and, you know, theoretical considerations, and how they would strike the right balance in deciding what topics to add and what topics to leave on the table. So again, as others have said, very robust discussion, and I actually enjoyed it. I learned quite a bit. So that was my observation.
Very good. Thank you for that. Tim, I'll turn it back over to you for any closing topics.
Yep, thank you. And I'll just recognize in the interest of time, I'll be brief. The committee also spent time going through its annual self-assessment survey and the results. We had 5 of the 6 committee members shared their feedback. We discussed that feedback. One of the things is, just for those listening, is throughout the year, we're also talking about what we can do better. And one of the things that we've been trying to do is just leave more time so we can have discussion and debate in the committee meeting. And we're achieving that, and people felt like we were adapting to that. So we have more time to get to the issues that are really on Rich and his team's mind. So with that, I will now pass it on to John, I think.
Don?
Yep. Thank you, Tim and Kathy. And want to welcome everyone, wish you a happy afternoon. And add my also my welcome to our 4 new trustees. So obviously we are meeting virtually today, given the recent outbreak of the Omicron variant. But I am pleased to report that as of this week, our staff has returned to our offices on the flexible schedule we implemented last fall. That has most of our staff in the office at least 3 days a week. And we made this decision as a result of the really rapid diminishment of new caseload in our area here in Norwalk. As of this moment, we have not yet fully reopened our offices to outside visitors, but we will be working on developing appropriate protocols to enable that. Speaking of offices, I'm pleased to announce we've concluded a lease to move to new offices here in Norwalk in the fall of this year. Our new location will be at 801 Main Avenue, which is actually less than half a mile as the crow flies from our current location. And since our current lease is expiring this fall, we began an extensive project last year to examine our future office requirements. And in that project, we considered all options, including staying in our current location and moving to different areas. As we've been in our current location for more than 30 years, a critical component of this project was to determine the technology and office design needs for the future, including the ability to host hybrid meetings with both in-person and remote attendees in a seamless fashion. Since there was no space, including our current space, that was readily available to us that already meets these needs, we face a significant build-out project to develop our new offices and the attendant technology. We have budgeted a capital expenditure of approximately $23 million in 2022 to meet the construction and technology costs of this project. Two things I want to point out about that figure. First, it is net of a very substantial lease concession provided by our new landlord. Second, the FASB Board of Trustees have approved that we will defray $20 million of this capital cost from the FASB reserves, and then consider in the future the extent to which we should rebuild our reserves and the time frame for doing so, such that any impact on the FASB's and GASB's accounting support fees will be spread over a multi-year period. Since I'm on the subject of budgetary matters, I'm pleased to note that on February 8th, the SEC issued an order finding that the FASB annual 2022 accounting support fees are consistent with Section 109 of the Sarbanes-Oxley Act. We will be working with the PCAOB to begin the process of collecting those fees. And in addition, we will work with FINRA to begin the process of collecting the accounting support fees for the GASB. I previously reported on the FAFS 2022 budget and accounting support fees. I'd like to note we'll be shortly posting details of that budget on the FAFS website. As just discussed, this year's accounting support fees reflect capital expenditures relating to our office relocation project. And they also reflect capital expenditures to support our CV&E publication technology project, which I'll address in a second. I'd like to remind listeners that the FAF voluntarily contributes substantial portions of our revenue from publications to offset our accounting support fees. I'd also like to note that the two projects I just mentioned are important but non-recurring projects. Once again, the details will be available on our website. The content and vision and enablement project, which is designed to take our publication system into the 21st century, is proceeding towards, we hope, completion in the second quarter of this year. This has been an extensive multi-year project, and with involvement from both the FAF teams, the FASB and GASB, and multiple outside vendors. And I'm very pleased that it is tracking on time and on budget. Finally, I'd like to close my report by noting that the Financial Accounting Foundation is celebrating its 50th anniversary this year. We kicked off the celebration in early January by launching a dedicated page on our website. June 30 is the actual 50th birthday for the organization. We are hoping that pandemic conditions will permit us to host a stakeholder dinner in Washington, D.C., an in-person dinner this spring, at which we can mark this milestone. We are also working on other opportunities during this year to reflect on our history. And so, Madam Chair, that's my report. I'd be happy to take any questions.
Thanks, John. Any questions for John? No? Thanks again, John. So our final report is from our treasurer, David Lillard. David, want to provide your report on the financials?
Thank you, Madam Chair. Let's see, the FAF's financial results for the year ending December 31, 2021 are located on page 89 of your materials. That's master page 89. Overall, the financial condition of the FAF remains strong. Net assets increased $3.8 million overall, which amounted to a $3.4 million favorable variance against budget, primarily due to favorable variances in operating expenses. Some of the key drivers were FAF expenses were $1.4 million under budget, which related to a combination of lower salary and benefit costs, relocation and placement expenses, professional fees, and travel and meeting costs related to COVID-19. FASB salary and benefit cost decreases due to delayed start of incoming personnel and FASB chair position and other open positions. And also FASB and GASB expenses were over $3 million lower than expected, respectively, driven by lower salary and benefit costs in regard to vacant technical positions, as well as travel and meeting costs related to COVID-19. The reserve fund investment income was flat for the year compared to a budgeted return of approximately 1.0 million, reflecting poor market conditions for the reserve fund's conservative asset allocation. The CVE initiative capital expenditures amounted to 8 million for the year, as the multi-year project is expected to be completed in 2022. And overall headcount was below the budget, and reflecting several FASB and GASB technical positions. However, a number of these positions have been filled in January. And that's my report, Madam Chair.
Thanks very much, David. So this concludes the public session of today's FAF Board of Trustees meeting. And I want to thank again everybody for joining us today, and remind everybody that our next FAF Board of Trustees meeting will be on Wednesday, May the 18th, which we do hope to hold in person. So again, thank you, and I wish everybody a good day.